Ladies and gentlemen, welcome to the December Cadence Capital Limited webcast. Our half-year results have now been released, and our net profit before tax was up 137% and post-tax up 117%. The really pleasing part about the announcement is that we now have over 4,300 shareholders, which is up 300 and something percent since the same period last year. That's after the successful placement of $54.1 million and the bonus option issue late last year. The FUM for the fund now is $230 million, actually slightly in excess of $230 million now. As we've mentioned before, self-managed super funds have become an increasing number of our shareholders. It was around 60% prior to Christmas, and now actually in excess of 60% of our entire shareholder base. Finally, the NTA we announced at the end of December for the half-year results was $1.44, and our NTA is slightly higher than that now as we do this webcast. The next slide, you'll see the performance tables that you would have got used to. They're in our monthly newsletters and have been for nearly 9 years now. Our gross performance has been 20% per annum for the last 8 and a bit years, whereas the market is only up about 6.3% over that period. As I've said on a number of occasions, we expect the market to actually, over the next, say, 8 to 10 years, produce more equity-like returns, which is around 10 to 12% per annum. Turning now to the portfolio, RHG Limited performed very well for us in that period up until the end of December. RHG, we have now been paid out for our position, and the auction process we were involved in last year actually resulted in 35% higher price than where the bidding process started, and we're very pleased that that has now been converted to cash. Henderson Group, now our largest position in the portfolio, has performed extremely well over the last half-year period, and as has Macquarie Bank. All of these companies have now reported their results, and all have reported very good results. The final company is Interim, which is an iron ore producer and steel company, and it has also announced its result and had a very, very good result, and actually has performed extremely well coming into this new year as well. The two underperformers in the portfolio were QBE and Macmillan Shakespeare. I think if you look at our last newsletter and the list of stocks in the portfolio, you'll see that both of those positions are now very small positions inside the portfolio. Turning now to the interim dividend and the dividend table that you would have got used to seeing in our newsletter now. We've just announced a 5-cent fully franked dividend for the interim, which is a 7.3% fully franked yield, or a 10.4% grossed up yield based on our share price on the 31st of December. And the payment date for that dividend is the 24th of April 2014. Anyone that exercises their bonus options before the record date, I beg your pardon, will also be able to receive that interim dividend for the new shares that they've exercised. The following slide shows the performance of the fund for a year, 3 years, and since inception. And we've actually altered this table slightly now to show not only the performance of the shares and the dividends, but also the franking component, or the franking value that our shareholders have earned compared to the All Ordinaries Accumulation Index. For example, if you look at the since listing table, you'll see that the All Ords has delivered around 12.8% of franking for shareholders, whereas our stock has delivered around 37% of franking, which is actually nearly 3 times what the overall market has produced. So the franking component of the return is, of course, very important, and we would encourage our shareholders to actually participate in the dividend reinvestment program to continue to get the compounded benefit of that dividend reinvestment program and the compounding effect of the franking as well. Finally, as we always say, we like to keep our shareholders as up-to-date as possible. This webcast is one of the ways that we do that. We also produce a monthly newsletter which we think is worthwhile reading, and we would strongly encourage everyone to join up or subscribe to the newsletter if they're not already getting it. And we are now writing for Morningstar, Eureka, and the ASX have asked us to make contributions to their website as well. And in the quarter just gone, we have actually written a number of articles for Morningstar, a fortnightly stock recommendation and stock analysis for Eureka, and more recently we've just done an ASX newsletter, particularly focusing on contrarian investing. All of these are available on our website, these articles, and we would strongly encourage you to go to the news section of the website and have a look at those. For people that have any further information they'd like, please just send us, or any suggestions, please just send an email through to info@cadencecapital.com.au. Thank you very much for your continued support.